Okay, welcome everyone. Let's get right into the stock market technical analysis and trade idea analysis. So we're going to look at individual stock trade ideas and general markets. We'll look at gold and silver. Oil's been pretty interesting lately, and then we'll wrap up. So today, pretty much more of the same here on triple Qs. I always like to start out with triple Qs because it's the tech sector. It's got the mega cap tech stocks. And I really feel like when they sell off, the market sells off. That is a fact. The market cannot stand up without the FANG stocks standing up. So I always like to start here. Triple Qs, more of the same really. The last 4 days, we basically are just trading sideways. We have a potential downtrend line right here, and we're at it right now. So you'll see here, there's the high, there's a tag of that trend line, and then there's another one. The other thing is we do have this bullish divergence right here, so that just remains there on the daily, and that's bullish in general on the momentum. Okay, so we're at potential trend line resistance with bullish momentum. We could break out. We could have a breakout below this downtrend line and run up to this 200-day moving average is where I think it would want to go, up to about 367.92. That is completely possible. So, if you don't know which way this thing's going to go, I would, in my opinion, keep things light. You can always jump into a trade once it becomes a little more clear. We're definitely at the point of where this is either going to break out or reject right here. And, it's hard to say which way it's going to go. The bullish divergence tells me it's, higher probability it's going to break to the upside. But I also see some signs that we could have one more leg lower as well. So that's what they look like. That's what I'm looking at on triple Qs. IWM. So IWM is trading. Got some little day trading marks I've been marking out today, but IWM is trading pretty much right into kind of this resistance level. The real resistance is right up here at 209. And as I roll out, you'll see here, that's that area of support that it held for over a year. We finally broke. We hit it once right here. It was rejected. And, that's, if it goes up there, that's resistance again. That's the objective area to short. I'm not so sure it's going to get up there. And so, because we've already hit it once and we were rejected, I think it's a higher probability tells me we're going to reject here and make another leg lower. But again, it's not too far up overhead right now where we're at. This is only another 2% to the upside. So again, if you don't know, just keep it light. That's what I would suggest. Looking at the hourly chart here on IWM, starting to put in negative divergence. So see it right there. See how we're starting to head lower on the momentum on the PPO and the RSI. PPO is not fully confirmed. And in fact, they're both not really confirmed. So you'd want to see these start to turn down like this to help confirm. But, we have, an equal high basically right now with lower momentum. So that, maybe we pop up to that level, that 209 area, and then reject. That's completely possible. Again, it's objective to short right up here. So that is the area that if we got up there, I'd be interested in, establishing a short. And the SPY, the SPY is just kind of, it's kind of bull flagging is what I would have to say. You have this flagpole here, and then you create the flag right in here. And then what you do is you just take that flagpole and extend it. And that puts the SPY all the way up here at this red trend line that I have marked out, up around 456.70. And that is a back test of the bigger trend line. Looking at the weekly chart here, here's your 2009 lows, and here's all the tags on the weekly chart of this trend line support. We broke it in 2018, and it was resistance then. So we traded up right there, hit resistance, COVID. Okay, the markets were primed to sell off, and then all of a sudden they cared about COVID right in here. Okay, they didn't care. COVID was known all through here in November. Nobody cared until you hit that resistance, and then technically the markets were set up for a massive sell-off. So in 2000, the Fed was able to recover this trend line in 2021, and you can see that's all these tags were holding that trend line, and there it is. So we're below it, and we could back test and run up and hit it from underneath as resistance. So just want to point that out. That is a possibility. Again, if you're not sure, just keep things light. And again, I'm not quite sure right now, whether we go higher. If we were up here, this is an objective area to short. Right here, we're kind of in the middle of the area where it could break to the upside or it could fail. I don't know which way it's going to go, to be honest. Bullish divergence on the momentum, on the PPO and the RSI, so that is in play. So the probability is to the upside, I would have to say. And therefore, I'm looking to keep things light in general. Oil. So oil futures, little bit of a false breakdown here. So we had this trend line we've been walking up on the oil futures. This is the daily chart. Broke down. We never got that impulsive sell down. It just kind of kept hanging out there, back testing. And then over the last 2 days, strong impulsive recovery, so bear trap basically, and a strong recovery. The divergences, as far as I can tell, have been burned through. At least see the RSI. So we had negative divergence. As we continued to drift higher here, we were starting to head lower in momentum. But this move here takes out that divergence, and we now have, we burned through that negative divergence basically. So in general, that's super bullish. Oil is extremely bullish, and that's, again, not, that's why I'm not shorting it. I'm not interested in shorting it. We took a quick little shot at a potential short there, got out of that one a few days ago. And I wouldn't be chasing it here, but, I think if we get pullbacks, it's probably a long. So I would assume oil is a buy on dip until I see something different. Okay, gold. So gold continues to be buy on dip, meaning it is, we're in a bull market in gold. We've had a major breakout of this isometrical triangle. So just the bigger picture on gold, going back to 2018, we're in a bull market. Higher lows, higher highs, continuing to uptrend. We had a huge ramp up back in August of 2020, and then a big, long 2-year consolidation / correction within that bull market. Again, if you've been following me, I exited my mining positions in here and then started to rebuild the position back here in March of 21 is really down here at supports where I really started to get interested and rebuild the position. And then each tag of support I've been adding, building a long position down, basically down here at support. We now have a breakout of this big consolidation triangle, and right now I'm forecasting that we're heading up to about 2,600 in gold. This is gold bullion. So continuing the bull trend, you can see, as it sells off in the morning, the buyers are stepping in and buying it up. And that's a pretty common sign of a bull trend. You might sell off in the morning and then the buyers step right in and buy it up. So I'm continuing to see signs across all the miners that it's a buy on dip, and I'm just looking to continue to add. Today I added some of this BTG. Again, on the hourly chart, you can see this slight uptrend we've been in. And this morning we dipped down to support, and I added a little bit right there. So continuing to add at support across various miners. And what I do is just scan in the morning the miners to look at which ones are hitting support. And if I'm interested in that mining stock, then I'll add to that position. So they continue to look good and look bullish. Upward it goes. Little bit of a speculative play here, but this is GPL, Great Panther Mining. It's a precious metal miner, and it's a penny stock. So it's kind of an exploration company, extremely high risk and high reward as well. This one, again, you want to adjust how much you put into trades if they're very speculative. So you don't want to just load the boat on a 22-cent penny stock. You want to taper down your position sizing because you don't need as large of a position size to make good money, because when these things run, they run big. So on this one, we have bullish divergence on the daily chart on both momentum indicators. This has just been drifting lower, putting in that bullish divergence. Little downtrend line here I've been following, and we're slightly above it. It's not really a breakout. It's just kind of treading water. And the thing to notice, though, is earnings. We've got earnings coming out. It looks like after the bell, I believe, is when they're coming out. And we have a gap to fill right up here at 36 cents, 36.39. So bullish momentum. The which gives me the higher probability that this is going to, gap up on earnings, and it's likely going to happen on the earnings report. So there's a play. It's kind of gambling money, basically. And again, everything on this channel is just my opinion. I'm not giving financial advice. I'm just pointing out charts and telling you what I'm interested in doing. PayPal. So PayPal is right there at that area where I'd be interested in stopping out of the trade. Again, I entered the trade pretty much right here at 106.19, pretty much right where it's at. We're at break even. I'm going to give this one a little bit of room and see the daily close. So at this point, I'm interested in stopping out on a daily close below that 106.19. But if it can hold it intraday, then this looks like it's just a stop rate and it's going to, rally. So again, this one, bullish divergence. It really shows up on the hourly chart here. Clean bullish divergence right there. So this was drifting lower in price. We had bullish divergence. We then had a downtrend line to watch. We broke trend, popped, came back in. Looks like a back test. And I think it has the potential to continue upward, moving to our profit target up here at about 129.06. So from where we're at now, if we can continue up there, it's about a 21% trade. So I still like it. It's just barely hanging in there. So again, that's what I'm looking for on that one, is looking for this to continue higher, and I'll stop out on a daily close below 106.19. Okay, I'm noticing the bonds TLT are selling off today. Pretty good, actually. And that's going to continue to put pressure on interest rates rising. So typically when you see interest rates rise, we should see tech start to sell off. And then just looping it back around to triple Qs, you can see we're right there at that potential resistance line on this downtrend line. So, I'm kind of leaning towards one more leg lower in the markets, where triple Qs kind of sells down and hits our target about 299, 300 as probably this final target for triple Qs for right now. And then IWM, I'm still looking for that one to sell down to this 170 area. So that would be consistent with one more leg lower. You could probably even draw this big flag right here. And we're just, if I mark this out, we're kind of just flagging right here. And then the continuation of that flag puts us down in that 170 area. Little hesitancy because we have bullish divergences showing up on the indices. So it's definitely giving me a little bit of hesitancy. And, the way I'm going to probably approach it is just be mildly short right now. And then add to those shorts if I get some sort of confirmation. And if I'm wrong and it starts to rally, and going back to the triple Qs, if we break above this downtrend line, again, I'm mildly short. I can stop out. It's not, it will be small losses, and look for another setup. So that's all I have for today. If I see anything, showing up right now, I'm not seeing a lot of individual trade ideas quite yet. So I'm keeping an eye out for those. And if I see anything that's interesting, I'll let you guys know. Leave me a thumbs up on your way out, and I'll catch you guys on the next one. Bye.